Welcome everyone to TwentyEA's latest webinar. Today we're going to be looking at how the property market's performed in the first half of 2024 and also touching on what impact a Labour government might have on housing in moving forward. And I'm delighted to say we've got arguably our best lineup yet. So let me just introduce our panel to you. I'll start with Gareth. So we've got Gareth Samples, CEO of the Property Franchise Group. Welcome, Gareth.
Good morning.
We've got Nathan Emerson, CEO of Propertymark.
Good morning.
And as usual, we've got Stuart Ducker, TwentyEA's very own Strategic Solutions Director.
Good morning to you.
Morning, Stuart. So let's jump straight in, shall we, and just discuss the market. So we're filming this at the end of July, so we've got all the data for the first half of the year. Stuart, as our kind of data guru, can you perhaps summarise where we are with the sales market and some of the positives?
Sure. I think we're in a pretty good place, if you want my honest opinion. So the data is up to date to the end of July. From January. Transactions are now 2% up on last year. They're up to date January to May. But they will be higher because we've seen the demand coming through, which I'll talk about in a minute. But basically our view is that you should expect somewhere between 1.15 and 1.2 million transactions in 2024, which is a pretty good marketplace compared to where we've been. From the supply side, it's the highest in 6 years. 11% up on 23, 6% up on 19. More towards the premium end of the marketplace, so that's doing quite well, sort of £1 million plus houses. And also at both ends of the country, which is a bit strange. So Scotland and the southwest are the regions that are doing the best in terms of supply. In terms of demand, and by demand I'm talking about SSTCs or sales agreed, it's 17% up on last year, which is huge, 5% up on 2019. And it's really London, the east and the southeast that are leading the way in that, with mid-price ranges. There, but very, very positive news for agents and everybody else involved with property. In every single month this year, there's been higher demand in terms of the volumes of sales agreed than there was in 2019 and 2023. So it's pretty good news. The only blot on the landscape is price reductions. So there's more of those than there was last year, and there's also more of them than there was in 2019. So these days, if you put a property on the marketplace, 38% of them will get at least one reduction in price, which is quite high. In terms of prices themselves, the instruction prices are rising roughly the same as transaction prices, about 2%. Time to sell's gone up, but it's no different to 2019. The fall-through rate's gone down. Time to exchange is still at 4 months, which is another black mark, unfortunately. But apart from that, I think it's pretty good health in terms of the sales marketplace.
Okay, so sounds like we're in pretty good shape. Gareth, I'll perhaps come to you next. So we were talking off air. Obviously, Property Franchise Group have close to 2,000 branches now. Absolutely. So you're a pretty good barometer of what's happening in the market, hopefully. And these are located all across the UK. So perhaps can you just give us a bit of a flavour from your franchisees and how you're finding it?
Yeah, absolutely. I think I'd reiterate those numbers. I think what you've seen so far is good levels of activity in terms of sales agreed that haven't quite come through in terms of completions yet. So the agent hasn't got paid yet. And that's the rebalance from last year. Last year was tough for estate agents. So front-end activity been good all year. I think we said 17% up year on year. Completions 2%. So the second half of the year, I think from a financial perspective, is going to be more lucrative for estate agents than the first 6 months. But you look at the market, we didn't believe it was going to be quite as good this year. Last year was really tough. This year recovered remarkably well. Interest rates haven't come down yet. That was talked about at the start of the year. We're still waiting for that first interest rate cut. So, the elections happened, doesn't seem to have dimmed the market. So we've been through quite a lot in the last 12 months. To have a market as strong and robust as 24 is performing at, I'm delighted for all of our franchisees and licensees that they've got a good market to be able to earn some money.
Yeah, great. And Nathan, I'll come to you. So obviously Propertymark, I think about 12,000 member offices, 18,000 members. Yep. So again, you're speaking to agents all the time. You get a good sense of what's happening on the ground. What how are you finding it when you're speaking to agents, or are there still challenges, or what are the main challenges you hear?
I think there are challenges. I mean, I echo Gareth's thoughts here. It's, there's a lot of positivity out there and there's a lot of opportunity. The bit that hasn't surprised me is the price reductions, because I think in any market where we see supply increase, obviously you do get people seeing the sales, you do get vendors wanting to push the prices a little bit. For me, it's not about the volume of price reductions, it's meaningful price reductions. And I think most of the agents that I'm talking to day in, day out have gone down the route of the small price reduction just to tickle around the edges, so to speak. They're now getting into proper serious conversations with people. Length of time that it's taking to sell against the competition is becoming more important. And we're set for a good year. I think for me, the barometer is always, if we're less than 1 million, we've got a bit of a problem. If we're selling between 1 and 1.2 million completions, actually broadly the market for most agents is okay. They can scrape by quite nicely, really. And I think we're quite nicely hitting the levels we need to be doing to give everybody the confidence, really.
Yeah, agree.
Yeah, we've actually just done some research on fall throughs, which is probably intrinsically linked to price reductions. If it's priced right, probably. But what we've looked at is a property that sells within the first 25 days only has a 5% chance of falling through, which I've never really seen this before. Once you and Stuart, you've probably got the numbers in the top of your head, but the longer it takes to sell, the higher that fall through rate goes.
That's just how you are. So if a property takes over 100 days to sell, the fall through rate is 45%.
Yeah. And I suppose that kind of is linked to price reduction. I think we talk about it all the time. If pricing properties correctly just has so many benefits, and that kind of shows that. And just looking at fall throughs. So but I think in summary, pretty good market, probably better than where we thought we'd be this time last year. Mm-hmm. Stuart, I'll come to you next just to talk about lettings. Probably slightly less positive, but. Can you perhaps summarise where we are with lettings, probably in a similar place to previous sessions we've done?
Sure, yeah, no problem at all. Again, the data is from January to July. The supply side is actually up and increasing. It's 14% up on last year. It's increased further in the highest lettings prices. So anything that's sort of £1,500 per calendar month and above is the bit where the growth's coming from. And much of that supply growth is in London. I mean, it is 35-38% of the market. So now it's the demand that's astonishing factors, of course, because it just seems relentless. So nationally it's 16% up on 23. So supply is 14% up, demand 16% up. What does that mean? It means you have a stock shortage. It's probably worth talking about London for just a second, because the demand is a whopping 34% higher this year than it was last year. I mean, that is just crazy marketplace. So, consequently, nationally, if you're a renter at the minute, you have 276,000 rental properties to choose from on the market, and those figures are correct at the end of July, which is starting 25% lower than 2019. So the problems that we've been facing all of last year pretty much, and this year to date, is again availability of stock, and the prices are just going bonkers. So they've gone up by, let agreed prices are up by 8% in the last year, for example. The north is highest, believe it or not, so that's between 10 and 15%, and London only had a 3% rise, which leads you to question whether or not the yields are there for private landlords. And just before the election, as it was reported in the FT, there was a fear of capital gains tax, and we did a piece about landlords selling houses and selling their stock. That seems to have continued after the election at the same time. So that is a big worry. This is probably the biggest single problem for government. How do we get the stock of private rental properties up? And they're facing landlords exiting the marketplace in perhaps numbers that we haven't really seen before. And that's got to be replaced somehow. And the yields just are not there in London and the south anymore, I don't think.
Yeah. Gareth, I know lettings is a big part of the Property Franchise Group's business. So perhaps how is it on the ground? What's the feedback from your franchisees regarding letting?
So I'd sort of reiterate all of that. I think the landlord selling piece, and we'll come back to capital gains tax maybe rising, and you know, I think people are selling all asset classes at the moment. But we had an office last year. 23 landlords decided they wanted to sell their property. The franchisee had 600 under management, so you know, 4-ish% of their stock. But he sold 21 of those 23 to existing landlords. So that's okay. That's okay where you keep that as a rental property in that location. Only 2 went to normal market, and that's difficult to pick out from the data. But capital gains tax going up to 50%. You know, I've seen, you know, friends, family members who are looking to sell their assets because of the fear of capital gains tax. I think the government could almost shoot itself in the foot if they continue to overtax landlords, where they say, I'm just going to sell those properties. Our job is to find landlords that want to provide good quality accommodation for tenants. The stats about demand don't shock me at all. We're living it day in, day out. The time people are staying in their property, because if they move, they're going to have to pay the higher price, is extending out. And there is less availability. So you've got this perfect storm where rents will continue to rise, but demand is still there. And in basic supply and demand, if people are willing to pay it, they're going to, you know, that's going to push prices up. So, you know, we're probably the largest letting agent in the UK in terms of mainstream. We've got 155,000 properties under management. We probably look after 155,000 more tenant find only landlords. So, you know, the market's strong. Our letting agents are providing really good service, delivering a really good result. But there are sort of, you know, concerns around the edges about, one, how long can these prices continue to increase, and how many landlords are going to want to exit the market if the government continues to overtax and you know, treat them, in my view, badly.
Yeah. I just want to touch on open rent for a second. So we've been tracking open rent for the last number of years, and in terms of instructions, so new lettings properties coming to the market, they have over a 15% market share, which is a big number. To put that in perspective, Purple Bricks, when they were at their largest, were less than 5%. So they are a big player in terms of instructions. Sometimes I speak to agents and they are not bothered by them at all. They don't see them as a threat. But I just wanted to get a view, perhaps, of, do you see open rent as a threat to the more traditional agent in terms of landlords bypassing them and going to open rent, or is it an opportunity, or how should they combat that?
I think I'll answer my one then.
Go on.
But yeah, so I think clearly it's a threat. You know, 15% of the market in relatively short space of time. I think why you get the reaction from agents is it's not necessarily impacting on them massively, because it's coming from landlords that never used an agent.
Yep.
So it's a midterm. It's an easier transition from, if you're managing your own property and you see open rent as that marketing piece, to put, you know, to do those marketing services for them. So, and that may be naive. You know, letting agents need to be aware of that threat. They are growing into an incredible organisation, but it hasn't affected the local agent yet, because somebody that wants full management, they want light touch lettings responsibility for their portfolio, use an agent. People that want a middle ground probably use open rent. People that, you know, there's still a huge amount of people in the letting space that manage their own property. And I think Renters Reform Bill will change that slightly, because I think more landlords will take the view that they want to use an agent to manage their property going forward.
Yeah. And Nathan, I know you do a lot in the letting space. Have you got a view of this?
Yeah, I've got several ideas really. I think certainly let's quickly go back to the supply and demand and the yields you mentioned. I think very interesting, because one of the other things we are starting to see coming through now actually is, in some areas of the country, not everywhere, but in some areas we have got to a stage where effectively rentals have pretty much peaked, as in the property is there. We know that on average there's 9 to 10 people per letting property. but actually some of those properties are sticking, they're taking a little bit longer to rent, they're coming down a little bit, and that's really where in some areas you've gone beyond the affordability, and so you've got people that physically cannot afford to pay it, and so that's not everywhere, but ironically some areas of London are starting to see exactly the same thing. So it's a very good question to look at the yield, because obviously if we continue to see house prices rising, property prices rising, that decreases where we are. I think things like open rent, I probably mirror a lot of what Gareth's going to say, but equally I think, Renters Reform Bill, and certainly as legislation continues to tighten in favour of the tenant. The one thing about having an agent is very often when you're doing it yourself and it doesn't go wrong, brilliant. And it doesn't go wrong again, brilliant. The problem is when it does go wrong and you've got yourself in a pickle, all of a sudden you realise the value of having a good agent. And many landlords will leave an agent, or they will have a go themselves. But as you are dealing with more and more and more legislation, and let's be honest, the outcomes of that, if you get it wrong, will be much more severe as we start to go forward. It gets to the stage as a landlord, you've either got to say to yourself, this model works for me, and I'm prepared to do all of the learning and everything else I need to do to keep on top of it, or I'm going to employ a good professional agent that knows what they're doing, that's qualified to do what they're going to do, and they will keep you safe and dry. And sometimes it's like an insurance policy, really. You're paying to protect yourself. You wouldn't drive without an insurance policy in your car. You'd be absolutely mental. Yet people will put big assets at risk and then end up coming to agents when they can't get the tenant out, because they've misserved, or they haven't got the correct notices, or they didn't even lodge the deposit in the first place. So there's an awful lot, I think, that comes out of this. Things like open rent will continue to grow. I don't think there's any doubt about that. It's the easy solution for a lot of people. But obviously, whether or not people stick there the long term, that will be the interesting part.
Yeah. And demand's there, so it looks
Correct.
attractive, doesn't it? But it's that, Nathan's quite right, it's that after you've got a tenant, how good is that tenant? Are they going to look after your property? Are they going to pay you the rent? That's the important bit that a letting agent really does provide.
And can I ask you both a question about this? Because one of the things that we're starting to see, and it is just starting to see over the course of the last sort of year and a half, is we work with a couple of companies whose plan is to take inward investment and buy lots of rental property, and it does seem to be getting more professional. And it's sort of you had your L&Gs and your Lloyds saying we're going to have a third of the rental market, and it never happened because of the fact that you can't build BTR properties that fast. But now we're getting to the situation where there's almost a perfect storm of the prices are okay. We're filming this ahead of the Bank of England's decision on the 1st of August slightly. So we don't know whether interest rates are going to be cut, but they're certainly going to go in a downward direction. So easier to purchase properties, the demand's there. And I think you are going to see more landlords with thousands of units. What does that mean for agents, basically? I think that's an interesting question.
Yeah, so we're not seeing that at the moment. So I mean that's going to take some time to build thousands of properties into a portfolio. Professionalises the space.
They're buying up properties at the minute with inward investment, and there seems to be quite a lot of it there. Sorry, Gareth.
Yeah. So again, not seeing that at the moment. Our portfolio size is pretty stable. It's not growing, but it's not shrinking. They are, mostly landlords with between 1 and 3 properties. The people most at risk, we're told, of these big landlords coming in and taking. I think the upside is they obviously see an opportunity, so they want to get into this space. I think that's good for everybody. I think that's good for landlords who, want to stay in the space, landlords that want to get out of the space. But it will all take a long time to transition. To go back to the example I gave at the start, 23 properties in 2023 on a portfolio of 600. It's tiny. Is it a threat? I don't think so. Will it professionalise the space? Yes, a little bit. Nathan can probably talk more about that, those bigger landlords and their appetite.
So I think you've already got that there. So in the student market, there are a lot of very, very large providers which are already there. They've got their own teams. Some of our biggest CMP scheme holders are not the big corporate agents. They're actually student, professional student accommodation outfits. Yep. So the transition from that marketplace into the more mainstream, probably a natural progression, because I think the student market is quite fierce, it's quite competitive, and so I think a bit of a diversification I could easily see starting to come into play. And yes, though, they will have the facilities they need, they do have the staffing they need, they have the infrastructure they need in order to do that, and they've usually got used to a fairly restricted timescale for turnarounds and things like that. So that's a natural progression. I think we're going to see that. Will it actually destabilise the equilibrium that Gareth's on about in the overall main term? Not particularly, no, because I think there's space for everybody in the market. And I think, let's not forget, it's variety that actually fuels this. It's not just everybody wants a 1 and 2 bedroom flat. Some people need a 3 bedroom semi, a detached house, a bungalow even. So the variety of accommodation does need the individual landlord to come out. And a lot of properties are not properties that are bought to rent out. We inherited a property, so we're renting out Auntie's bungalow, or we've inherited my father's detached house, we're renting that out, or we're moving in it and we're renting ours out. So they're accidental properties. They're not something you'd go out and buy because of a yield. They're something somebody's got through another circumstance, which they're capitalising on because they know the value will continue to increase over time. And I think that my sense is that variety of accommodation that is needed for an ageing population in renters. We've got a lot of renters now that are in their 50s and 55s, which 20 years ago would never even have occurred. They would all have been able to buy 20, 30 years ago. So that ageing population's coming through, and people wanting to stay in accommodation for longer. We already know that, and the government's making signs they're going to help them stay in the accommodation for longer, whether or not they pay the rent. That's a different story. So the reality is, it's definitely something I would see happening. It's already there, but equally, to Gareth's point, I think the overall mix, we're not going to see too much change in the short to medium term.
Yeah, great.
Great. Thanks.
I spoke to somebody the other. Thank you very much, by the way. I'm really genuinely interested in your answer. I spoke to somebody the other day who was telling me that a big landlord, I don't know what his portfolio is, 100 properties or something like that. And his plan was to buy up lots of old McCarthy and Stone properties that are like 5 and 6 years old. Because he was saying that a lot of people who are the ageing population, they're struggling they can't buy, they're struggling to afford to buy. And what he does is he buys these properties up and rents them out. They don't really need doing it. And I thought it was a fantastic little business.
Amazing.
That makes sense.
I had exactly the same conversation with a guy that runs Mellow Monday, actually, an investment show, who had done exactly that. He'd bought 3 or 4 McCarthy and Stone retirement homes.
Yeah.
And was getting a really good yield on them and was looking for more around the country. So that ageing population where people want to downside, maybe cash in, take the money off the table and go and rent a property, I think we're going to see more and more of.
Really? Sorry.
No, sorry. Right, I want to move on to the election result. So we're filming this 3 weeks after the election. So we've obviously got a Labour government. I think in terms of the market, it's business as usual. I don't think anything's really changed. But there have been some pledges. Obviously, Labour are in for the next 5 years or whatever it is. And I think, especially on the letting side, one of the issues for rising rents is just there is a severe lack of housing. And one of the government pledges is to build another 1.5 million homes over the course of the next Parliament. Not something new. We've heard this before over the years. But without getting perhaps too political, what are the chances, do we think, of 1.5 million homes being built? And I'll open that up. Who wants to go first?
To jump in there? Well, I should have. Who flicked for it?
So good.
Heads or tails?
You won.
I won. No, funnily enough, we've been looking at this quite carefully. So 1.5 million over a 5-year parliamentary term, that's 300,000. So we've effectively reinstated the target. The different thing is Labour saying we're going to deliver it. That's what they're saying. And in order to do that, they are looking to unlock a lot of land. They're reclassifying land. A new term, greyfield's come out now. And greyfield is actually an American term. It's things like where they have shopping centres at the outside of a town, bit of a scrubby parking lot. We're waiting to understand, and it's coming to light over the summer period, what Labour's definition of greyfield is, because we know that they've said they'll build on brownfield. We know that they've indicated they'll build on green belt. That didn't get down particularly well. So grey belt is a new way of reclassifying things from brown and green, and probably more green into grey. So black and white TV. So this is the bit we need to look at very, very carefully, because obviously it's, in a weird way, it's easy to say we've produced all the planning permission for all these houses and we're going to push planning through. But to actually get to a stage where you've got those converted items, the property's in train at the minute, the property's underdeveloped at the moment, we're not going to see a massive change on that for the next 12 to 18 months. There's no way they're going to affect that. So where they've got to do is do a lot of development in the back end of their parliamentary term. So the last 2.5 years, they've got to really ramp up. And in order to do that, they've probably got to deliver 350 to 400,000 units a year in the back end to counter for this other side. There's a lot of announcements coming out, and it's very rash. We heard today Angela Rayner's going to start sorting out the councils to make sure that they're putting back in the target. They're going to identify areas of land. They're going to push through to build. Anybody can push people to get planning permission. The difference is actually then encouraging the developers to build. Most developers already have a nice, happy land bank. The reason we haven't got the houses is there's more money in not developing the land than actually developing the land. So they are sat trickling it all through. So they're going to want incentives to build. What you build, the other ends, cost per square foot has gone up, build costs have gone up. So again, now you've got to incentivise buyers to be able to build these houses in the first place, because it's not the state that's building these, it's private developers at the moment that's building these. So are we looking at Help to Buy coming back across new homes and resale properties? Are there going to be incentives, mortgage guarantees? There's got to be a whole raft of measures. Just to build a lot of houses won't resolve the issue, because we've still got affordability, income multiples, and the cost of living that everybody else is dealing with. So they've got an opportunity to do something clever. My big worry is Greenbelt, because I think over successive governments, including Labour, they have been protected for a reason. A lot of it is grade 1, grade 2 agricultural land. Yeah. Once that's gone, that's gone. And again, it's easier to take that infrastructure money and dump it on a greenfield site. But what I'd probably argue is a lot of our towns and cities, a lot of that infrastructure is crumbling, the drains are struggling. Actually, if you put that money into there and expand it out where you were around the towns and cities, you've got new people benefiting from that infrastructure, and you've got existing people that will then see an upgrade from crumbling our infrastructure. So how they place it, what they tend to do, will make a big difference. Will they deliver 1.5 million built? We wait to see. And again, it's all what is the mix that we need to see? Not let's just build lots of tower blocks and crack on.
I think that's really important. So do I think they'll build 1.5 million? No, I don't think we've got enough. I saw somebody the other day that runs one of the largest brick firms in the UK. They said if they to build 300,000, we're 500 million bricks short currently to be able to build that. You then look at tradesmen, so plasterers, carpenters, electricians, and unfortunately there's been a sort of skills shortage. People haven't been going into those trades. It used to be the sort of technical colleges where you went and you became an electrician. So you start working the numbers, and it's admirable to say we need to build 300,000 houses, but Nathan's right. All of that will be at the back end of the Parliament. So 3 years where they're probably going to have to build 400,000 houses, and they have 2 years at 150. Haven't got the bricks, probably haven't got the wood, haven't got the carpenters. We haven't got the people to be able to build those. So there's a fundamental thing that has to change, in addition to just saying we're going to build houses.
And just on that point, and I don't ever hear this debated much. The way we build houses hasn't really changed in the last 100 years. I'm not a builder, but totally. it takes a long time, and you need all the materials. Yeah. If you go to countries in Europe, they can knock up a house in a week or two, and these kind of prefabricated houses. And I think to hit those targets, I think we need. And I know there are kind of sustainable businesses looking at this, but not making much inroads. But I think We need to fundamentally that if we could change the way we build houses, and they might not look as nice, but we might have to take that to build the houses we need.
Yeah. So who requires these houses? So where is the housing crisis? So who cannot be housed at the moment? Yeah. So there's definitely a lack of supply. So what type of person are we looking at? What accommodation do they need? Because builders want to build 4-bed detached houses. I can't believe the housing crisis because we haven't got enough 4-bed detached houses. So I think articulating the real problem, and I totally agree with you, coming up with a different way of housing people is the solution to this, to stop the housing crisis. You know, that's the bit that's not talked about. There are creative ways of coming up with different solutions that will undoubtedly help solve some of the housing crisis.
And I think we are seeing modular build. So, you can build hotels in a matter of weeks and months with effectively their shipping containers. They just drop one on top of the other and they skin it around and they're ready to go. So that's actually happening in the tourism industry. The bit I wanted to come back to you on was a very good point, was about the lack of labour and workforce skill to be able to do it. Obviously, we've not got quite the level of people from Europe coming in and doing the work that we used to have. But I think the other thing to not forget is Labour have also committed that they want to revive bringing in EPCs and refreshing those and looking to bring those up to the C grade by 2030. Yeah. So again, the other issue you've now got is you've got all the rental stock, which equally is going to need manual labour and conversion and a zapping of the labour force into doing that work. And some of that work is more skilled than fresh new build work. So again, you're going to have that, and that's going to have to bring a raft of incentives in to enable landlords to be able to do that. But again, that could be another area which finally makes people go, do you know what? I don't want to invest in the property. I don't want to do this. I want to get out before the taxation continues to rise. So it'll be interesting to see how that environment pans out, but I think that will have an effect on the workforce.
Yeah, no, I totally agree, and I think what you want is just honesty, openness, and honesty, because it is a problem. It's a problem for lots and lots of people in lots of places. So let's be honest about it. Let's really understand what stopped 300,000 properties being built in the last Parliament. Let's try and sort those out. And I do believe the intention is they want to build houses. They've come out. They want growth in the economy.
They do.
But let's be realistic. Let's look at things in a slightly different way. To how we've looked at it in the last 10 years, because every year we fail to meet these targets and the problem gets worse.
Yeah, but again, I think you've got, I think it's just under 1.2 million houses already passed for planning in the system that have not been built. So again, actually maybe it's more about when you get the planning permission, you do something about it. A lot of the land that is being pushed to the government in order to release it is often land locked by developers, not necessarily having bought the land, but very often on option agreements, because that's cloak and dagger. Nobody knows who owns what under an option agreement. So again, I think there's an awful lot at play really, and it's a sad fact. It's still more profitable not to develop the land, but to buy the land and sit on it for 3 or 4 years.
Yeah. And Help to Buy was massive, wasn't it? When that was withdrawn, I think the builders sort of almost stopped building to encourage the government to put it back in place. So, that incentive piece for the builders to build, the right type of houses in the right locations needs to be looked at as well.
Yeah. And another idea they've cited is the plan to build these new towns, which has happened before in the past, I think before my time, but and I think they're looking at potential sites to do that. What do we think on this? Is that a good idea? Does that work?
He's making us all feel old.
No, he is. I know.
Put a little dig in.
I don't remember them.
What's a new town?
So Milton Keynes, I guess, was a new town. Telford was a new town.
Yeah.
Northampton is actually a designated new town.
Is it?
Yeah.
Okay, interesting.
Listen, I think you've got to look at all of. So back to what I said before. Yeah. I think the first tranche of anything you've got, if you're making a major development, let's not forget, you build a new town. That sounds very great. You're putting all the infrastructure in.
You need all the
transport, school, everything else like that. That's really great. People who often buy there then have to still commute backwards and forwards to the places of work. So they're trying to get rid of cars off the road and then single-handedly building a town that then people need to buy a car to travel back to their place of work, sort of counteracts itself. So I think we're going to see some of that, but I would rather see that vast infrastructure that's done to build a brand new school or build a brand new hospital actually go into the service we've already got. If you look at a lot of those classroom sizes in a lot of the major cities, London's a prime example, you're seeing classroom sizes shrink because people can't afford to live in the centre of the towns, they're actually getting out. So actually, if you're going to do that, maybe the first thing to do is shore up the foundations of what you've already got at the moment, improve the lives for new people and existing people before smashing into and deciding I'm going to build a brand new town here and brand new town there. The amount of effort and infrastructure building a new town would make much greater sense, improving a lot more people in a lot of existing facilities that could easily bolt on the additional transport links and services, really.
They're quite hungry for land as well. Yeah, I mean, I used to work with a professor of geography at Leeds University, and he was saying if every city in the UK was built on the density of Milton Keynes, there would be no rural land left at all. Now, okay, you don't have to build it like Milton Keynes, but at the end of the day, it's got to be much more efficient, as you say, to do something else first.
Yep. Great. Well, yeah, I agree. I think the new government does want to solve this, but it's going to be a challenge. So we'll have to perhaps do the session in a year or two and see where we are.
Yeah, you're wrong.
Whilst I've got you, obviously, Gareth and Nathan, I want to touch on just the overall sector at the moment, the property sector. Obviously, you both, Nathan, I know you were previously an agent and you've been in the industry a while. So I'm finding that at the moment there's lots of mergers, acquisitions. Obviously, Gareth, you're an expert in this topic, and
it's his fault.
There's and there's been some high-profile ones for Property Franchise Group. I'm just interested. Why do you think there are so many mergers and acquisitions at the minute, and this kind of consolidation?
So let me answer from my perspective. Why did we do it? There was no sort of magic we've got to do it this year. You know, we worked on a 3-year cycle when we acquired the Hunters Group back in 2021. So we learned an awful lot about that. And I guess in 2023, we decided we were ready to go again. So you then look at who your targets are. You then start to talk to the people that, you know, run those targets. And we were really lucky that with the Belvoir deal, we were able to strike up a really good understanding with Dorian and Louise. It made enormous sense from a financial perspective, from a stock market perspective for both of us. And it was for us to then work out how this was going to be put together. And we were able to do that. But most of that work was done in 2023. And then the recent one, Guild and Fine & Country, again, we started discussions in 2023. And we were already deep in discussions with Belvoir. So it's like, can we do 2 at once? So it's not being greedy. It was like, look, you know, in an ideal world, that would probably have come up next year, but we don't live in an ideal world. So you then have the decision to make, you know, do we do both at once? And we took that decision as a board. And therefore it looks like we've done an awful lot. We won't do anything, and well, never to say never, but you know, the intention now is to see out that 3-year plan again, integrate the businesses, get them really settled down, and you know, continue to deliver exceptional service to our customers. So I think from my perspective, it was just timing. It was just the way it was. I think if you look at interest rates, they went up last year. So you say, why are people buying with interest? But I think we all perceive they're going to come down. Would there have been a better time to do it? You know, you could have done this at any point in the last 5-6 years. If I look at the Belvoir TPFG deal, that was talked about in 2017, 2019. So why now? You know, I think Lohman Group buying, you know, businesses, putting them into this sort of really big company with big lettings portfolios is really interesting. That's quite embryonic. So that's been built in the last 3 to 4 years. They've done an awful lot of transactions. So that's definitely consolidation of you know, small to medium-sized estate agency and lettings groups coming together for this big organisation called Lohman. So I mean that's certainly changed over the last 3 years.
And Nathan, perhaps come to you. So traditionally, the sector's been made up of lots of small independent agents on the high street. It's completely changed. We've got kind of these big firms, as we've mentioned a few of them. We've got the rise of the self-employed agent who don't have that high street presence. Where does this, if for the suppose the more traditional independent agents watching this, Is this a good thing for them? Or is it a bad thing for them, or somewhere in the middle?
I think a lot of them see it as a good thing, really,
Yeah.
because what you're doing is, as the larger groups continue to grow, it gives people an exit strategy. Back to your original question, why are people doing it? And Gareth absolutely eloquently took it, how they've done it and why they've done it, and absolutely the right thing. But if you look at why have we got so many small 1, 2 and 3 branch agencies, which is the main, a lot of that does come back out of the 80s and 90s, when the insurance companies all bought and the banks and building societies all bought agencies, spat them all out the other end, and everybody set up. So generationally, you've got a lot of people now in their 50s and 60s getting to the stage where they think, do you know what, I'm ready to go. And all of a sudden people come along at the right time, whether it's the size of something like the Belvoir deal, where there's been 2 or 3 hits to do it, or whether it's the guy that's been sat there working, he's built his family up, he's 60 odd years old now, and he's ready just to sell out, take his money, thank you very much. You've got that generational thing. We're going to see something very different coming in now, because just to set an office up now, to actually get it set up, run it till it starts making a profit, it's not unheard of that you're probably going to need the best part of £250,000 to do it. People don't have that money, or they're not prepared to take that risk, even if they can get the financing. So the models that we've got emerging now, where you've got the EXPs and the smaller things with a support network around it, they will be the natural default for people to go to that would have set up an office before, because it was a lot cheaper to set up on your own. So where that cycle will be further down the line will be very, very interesting. I think for the existing small to medium-sized agency, there are people that love the sanctity of a big group with multiple brands. There are people who like the independent service, and there are people that will traditionally just follow. You've got an office there and people are driving past it every day. That's thousands of people a day that see that office, see that brand. So I don't think the local independent's dead, quite the opposite. I think they'll see a lot of opportunity. They can bolt on a lot more services. They can be nimble. They've got more strength than the guys running around on their own, which very often are as good as their own reputation that they often built up in that environment. The one thing we do see, people coming into the self-employed model, high turnover if they're not known in their environment, and they often fall back into traditional agency, which is the springboard for most. So I'm optimistic. I think it's great. I think it's good that some people have gone and cleared a bit away, and obviously it's meant for people like Gareth to pick up some of those brands and just do something with them. Is quite exciting. I
think the big change, you go back 10, 15 years, there's been a massive focus on lettings in the last 15 years. And that's the piece that some of these sort of hybrid self-employed estate agents, they're going to need to start looking at, do they buy a lettings book? Because everyone's gone into lettings, everyone's tried to get into lettings because it's that balance to a good market, or bad market, more importantly. And we're really lucky that we've got, each of our businesses have a really good lettings book, but the long-term sustainability of any business is going to be lettings based, and I think that's been demonstrated.
And hasn't that changed? 25 years
ago, we didn't do lettings, did we?
Lettings. But you're right. It's an exit strategy. You need the value of your business is in your lettings book, isn't it? Because you don't have that.
But it was, you wanted the sales business and you wanted the brands, and that's where people primarily went. That's where the star performers were, and that world has changed. And from Gareth's point of view, your value, if you are a sales-only business, unless you've got a phenomenal brand in an area, and I'll caveat that, people will want the brand for that. But if you've got that, you're only as good as your last sale, really. It's the value of your order book at the time. So the one thing that your small to medium-sized agent does do, certainly if they're multi-practice, they have got a reputation, they have got a brand, they have got a value in the letting stock, and if it's a really well brand, people will pay for it. The end product for the smaller, the guy right at the end, if they haven't got some kind of lettings build up, effectively they've got a self-employed job until such time as they retire, haven't they? Really, that's where
no real asset value.
And I think you touched on it earlier, Nathan, just to kind of finish off and summarise. But there's so much variety now. So if I was 18, 19, wanted to become an estate agent today, there's so many different models or types of agent based on what you want. And I'm seeing so much fresh blood coming into the industry in the last 2 or 3 years in all the models, whereas perhaps it had arguably got a bit stale and samey over the last 10 years. But there's some really good forward-thinking agents coming. And again, that variety leads to the consumer, because they can choose whether they want to work with a single point self-employed agent or a bigger corporate or the more traditional. So I think the sector's in in a healthy shape. I think it's being shook up, but I think that's a good thing. And it'd be good to see
And
where we go
I
to.
think for people working in that sector, they've got choice now. You know,
Yeah.
some people want the flexibility or want to be able to deliver a different level of service. Other people want to stick with a more traditional thing, and other people, you know, want to find the safety of a larger corporate environment. So you've got more opportunity for people, and that's good because we need more good caliber people in the sector. And I think that's something we've struggled with.
Attraction,
with the attraction part.
Yeah, agreed. Well, on that note, let's leave it there. So, yeah, really enjoyed the discussion today. Thanks ever so much for coming, and hopefully have you back on the show soon.
Brilliant. Thank you very
Thanks,
much.
everyone.
Cheers.